Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Brian Stutland, Chief Investment Officer with Equity Armor Investments. And Brian, the only thing I can say to you is time does fly when you're having fun, and certainly we saw that for the first half of 2022. Nasdaq 100 down nearly 30%. In fact, all the major averages down double digits. It really was, a tough start for the stock market this year.
It certainly was, and things just got hammered off the start. Obviously, Russia, Ukraine sort of triggered the downfall. Then the Federal Reserve really became the focus, and higher interest rates meant lower valuations for stocks. So what got hammered the most were some of the growth names that you normally see in the Nasdaq, and obviously that got punished a bit. And so as we sort of turn the clock for the second half of the year, I'm sort of still looking at some of those valuations. We're getting closer to levels where it seems more attractive, but I don't know if we're quite there yet.
Yeah, and Brian, I've been asking you over the past month. We've seen a couple of bounces, some decent bounces. In fact, last week we had quite the stunning rally. Is it still too early to trust these bounces because we're just not seeing any follow through here? But in the same token, there are a number of great quality companies in the Nasdaq 100 who've gotten beaten up along with the rest of the market that you have to start thinking about the second half here and what looks attractive.
Well, Jill, certainly these bounces to the upside that we see off some lows, that's not to me really a sign of a bull market. That's a sign of a bear market where shorts sort of get squeezed out, or some people try and step in and buy and they try and sucker you into these rallies. When we're seeing 3% moves in the broader market or 4% moves to the upside in the NASDAQ, to me, that's a little irregular. And I'm a little leery that I jump in off of that. I'm looking for levels a little bit higher in the NASDAQ. Let's call it like 12,000 to 12,200 area where we really got to break above if I'm going to call these rallies for real. And I'd like to see some of the volatility subside. When you look at vol Q and the index level there, when it's trading around the 30 level, we really need to see it get down into the low 20s, if not lower, for me to feel like now we're into this bull market cycle. But until then, these are bear market type rallies.
Yeah, and from a technical perspective, we understand that, but fundamentally, think about everything that is converging at the same time. We have Russia, Ukraine, we have our own domestic political issues, to be quite honest. We have supply chain constraints, which have not subsided, inflation across the board, and supply chain issues haven't resided. And any one of those things, should it fix itself or right itself, could be a catalyst there. But to have 4 or 5 happening at once, when any one of them could be a catalyst to the up or downside, really makes it challenging.
It really is, Jill. It's a very challenging environment. And when you get into these environments, we have so many factors on the fundamental side pushing things to the downside. You have to start to look at some of those forward-looking PEs and say to yourself, is it cheap enough? Is the market at some levels? And when I was looking at names like Microsoft, which we own in our funds, names like Apple and Amazon, which we also own, those multiples aren't quite at levels I'd like to see that I saw maybe a decade ago when we saw interest rates of the 10-year around 3%. The multiples on some of these names were a little bit lower. So could there be some more downside paying 10 or 20%? Certainly that's a possibility. But a name like Amazon that's gotten hit so hard, names like Google that have such great balance sheet, they have more than just their core business around them. Those are names I still do want to own. You just have to be a little leery here that these valuations need to come down a little more before we actually get a real rebound in the stock market. Because like you said, there's so many factors working against these names. To me, that means forward PEs have to be lower.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.